Good afternoon. The National Caucus and Center on Black Aging, Incorporated, NCBA, in partnership with the Women's Institute for a Secure Retirement, Weiser, welcome you to our webinar today on Social Security and your taxes. So our presenter today is Laurel Beeden of Weiser, and she spent her career working on retirement income policy as a researcher, writer, speaker, and educator in academia, government, think tanks, and on Capitol Hill. In retirement, she continues her policy work part-time and is a member of the English Department Alumni Advisory Board at Virginia Tech, where she received her doctorate. Laurel, thank you and welcome. Welcome.
Thank you. I'm delighted to be here, and my email address says English major. I also will assure all of you out there about my research techniques. I took an awful lot of statistics all through my graduate degrees. Just about killed me, but I made it, and so that helps me as a reader, writer, and also as a numbers person. Today, I'm going to talk with you about Social Security and your taxes, because I think Social Security gets confused, not Social Security, but the idea of Social Security as a tax confused with your federal income taxes and the IRS. I am not a specialist for the IRS. What I'm going to do in some of those cases is refer you to the IRS or give you lots of references to help you if you want after the presentation is over, and it may be that I do not have the cool answer. In fact, a lot of times I don't have the cool answer. And there are places where you can go to find answers. So let's take a look at Social Security and your taxes. And may I have the next slide, please? I thought it'd be good to tell you a little bit about Weiser so you know who it is that you're hearing talk. We're a nonprofit founded in 1996, and our purpose is to provide women with basic financial information aimed at helping them take financial control of their lives. It's a real issue these days. People are sitting up, not just women, but a lot of women, and saying, oh my goodness, I didn't know that about a whole lot of financial things. And that's really what Weiser is about. As well, Weiser operates the National Resource Center on Women and Retirement Planning with the U.S. Administration on Aging. And next slide, please. The National Resource Center on Women in Retirement Planning is a one-stop gateway to provide basic retirement information and resources, and I recommend that you all take a look at it. And you can just go to weiserwomen.org and find it there. Next slide, please. And we also have just opened up the Weiser Financial Caregiver Portal. And this is a real goodie. So many people, not just women, though more than 60% of caregivers are women, we've opened up a caregiver portal online that is a one-stop online shop that provides financial information and resources to caregivers throughout the caregiving cycle. And it's there to help both family caregivers and to provide resources and tools for people who are overseeing caregivers. So take a look at those resources that we have for you. Next slide, please. Onward and upward to Social Security and taxes. And the way you slice and dice this is, it seems to me that it can break out easily into two pieces. One, the I'm in the workforce group, and two, I'm receiving Social Security, or I'm retired or semi-retired. So let's look at I'm in the workforce. Next slide, please. Little bit of background. It used to be, and I'm so old that I remember this, when I got what we call the pay slip. And on the pay slip was what your salary was, how much of it you actually got after your federal tax and your state tax was taken out, and then your FICA. And what is FICA? And the big joke used to be, what is this FICA and who is he and why is he taking my money? Well, FICA is the Federal Insurance Contributions Act, which was the clever name back in the 1930s for Social Security, old age survivors and disability insurance. And it is deducted from your paycheck. And the money you pay in taxes is not held in a personal account for you to use when you get benefits. Or to oversimplify, the money you pay in FICA tax is not in a box in Baltimore with your name on it. We used to joke about the little people that would ride the Snow White and the Seven Dwarfs, that the Seven Dwarfs carried the money in bags from the Treasury to the basement of Social Security. Of course, that's not true. Today's workers help pay for today's retirees and other beneficiaries of Social Security benefits. Any unused money goes to the Social Security trust funds to help secure today and tomorrow for you and your family. And let me say that again. As workers, what we pay in FICA tax goes out first thing right away. FICA tax to pay Social Security benefits to your parents, your disabled spouse, your child under 16 who was the child of a deceased parent. If you have dependent parents, they may get Social Security benefits. I know when I go out and speak to young people and they're angry about paying FICA taxes, I say to a lot of the young men and even the young women, how would you like to have your mother-in-law move into your separate bedroom? Because if we eliminate Social Security, there are going to be a lot of poor older people. So get your second bedroom ready. Again, remember that the money that is not used to pay benefits, in other words, if we take in more money from workers than there are people receiving benefits, that means that money goes, the extra goes into the trust funds to help secure today and tomorrow's benefits. So when you hear people say, oh, the trust funds are going to be empty by 2035, what that means is that the number of people paying benefits in, or paying taxes in, and the number of beneficiaries is evening out, so there's not any extra to put into the trust funds. And if the population of beneficiaries gets larger and larger, and the number of people and the dollars paying in cannot meet that amount, that means that Social Security benefits will be reduced. But understand, in no case does it mean that Social Security benefits will not be paid, because you'd have to have every worker in the country get COVID and die before Social Security benefits didn't get paid, because remember, workers earn and contribute, and it goes out to beneficiaries. The most recent trustees report shows, I think the date is 2032 now, that there will not be any money left over going into the trust funds. And it may be, if nothing is done, you would have to make some changes to Social Security. And people are working on that. And there are all kinds of websites and all kinds of opportunities to look at what can be done. And there are all kinds of wonderful things that can be done about that. Please do not worry about Social Security not being there for you. So I've done my little speech now. That's me. I think that's very important that everybody understand what is FICA and how does it work. So next slide, please. Okay, who pays and how much? Well, workers and their employers each pay 6.2% of the workers' earnings and contributions under FICA up to the limit. The total Social Security contribution, that's to old age survivors and disability insurance, is 12.4%, 6.2 and 6.2 employer and employee each. Earnings above, and this is in 2022, $147,000 or last year $142,800 are exempt from Social Security tax. The maximum withheld from wages in 2022, that would be if you earn $147,000 or more, would be $9,114. Okay, next slide, please. I'm self-employed. So if you're self-employed, Social Security considers you, and you are, both employer and employee, and you must pay the combined employer and employee tax amount. So that is 12.4% on that amount up to the tax cap of your net earnings, and then a 2.9% on Medicare on your entire net earnings. That's 2.9%. You will need to report your earnings to Social Security and the Internal Revenue Service. You must complete the following tax forms by April 15th, following any year in which you have net earnings of $400 or more. So, Form 1040, that's the individual tax return that all of us are working on now. Schedule C, that is the business form. Boy, my glasses are not working here. Let me put them down on my, I'm using my old glasses because I broke my glasses, and these are about 3 prescriptions ago. So bear with me if I squint at you. Schedule C, profit and loss from business. Schedule F, profit and loss from if you're farming. And then Schedule SE, that's self-employment tax. And if you'll notice at the bottom of the slide there, Social Security Administration has a publication if you are self-employed. And if you were doing something like selling Avon, or what is the, why can't I say the name of the people who sell laundry detergent, and that is self-employment, and you need to pay on your earnings from that, okay? You have to pay FICA. Next slide, please. If I work and receive Social Security benefits, now this is going to kind of cross over into the am I working or am I retired? If I work and receive Social Security benefits, do I still pay FICA tax? And the answer is yes. As long as you continue to work, even if you're receiving Social Security benefits, you will continue to pay Social Security taxes on your earnings. Social Security will check your record every year to see whether the additional earnings you had will increase your monthly benefit. Now, this is very important. And when we get to the very end, I'm going to step you through how benefits are calculated, because if you had very low earnings for 1 year and Social Security benefits are calculated based on 35 years of your earnings, unlike pensions, which are usually the high 3 or the high 5, that means that if one of your later years is higher, it will replace one of the lower earning years. So this is an important thing to know. Next slide, please. My employer and I both pay into Social Security. Then what happens? And again, each year your employer sends a copy of your W2 to SSA. This form reflects your income earned and taxes we withheld from the year before. And this is the information that you need to complete your tax returns. You know, your tax returns are going to ask you for this, or TurboTax will have you take the numbers from your tax from your W-2 and put it on their format. Social Security then matches your name and Social Security number against its database of all Social Security numbers. And when they find a match, they record the earnings information from the W-2 form in your earnings history. Next slide, please. Why are my W-2s and my Social Security records important? Your earnings history is the basis for determining your future eligibility and benefit amount for Social Security's retirement, disability, and survivor programs. We don't just, I haven't worked at Social Security for many years. I used to be with the Office of Research and Statistics at Social Security, and I still say we. Social Security takes the amount that you have earned each year and averages it over 35. And I'll go into this more in depth later on, but it's very important that you have exactly the right amount of earnings recorded by Social Security. Next slide, please. And this is the key to a lot of pain in the neck dealing with all kinds of income information. Your Social Security account. And if you don't have one, I recommend that you go through it and do it. You can go online for a My Social Security account. What that does is it makes available to you a personalized retirement benefit estimate. When you look at your Social Security account, you will see what, and of course it's an estimate, but it still gives you a feel for what would my benefit look like if I retired at age 62? What would it look like if I retired at full retirement age? What would it look like if I wait till I'm 70? Those estimates are there. You can also get estimates for your spouse's benefit. In other words, if I take a spousal benefit, is that more than if I take a benefit based on my own earnings? You can get proof that you do not receive benefits. There would be an empty slate for you. You can check your application status. I went online and applied for my benefits and I haven't heard anything yet. Or I don't think this looks right. You can also get your Social Security statement, and that statement lists all of your earnings records that have come through the W-2s and matched up with your account and that your employer has said that you have earned. That's very, very important. Every once in a while, not often, but every once in a while, an employer does not record earnings because they don't contribute for you. And you can go and look and say, wait a minute, I worked for Joe Smith for 3 years and I'm not seeing a recording of the contributions in my name. And you can report that to Social Security and see if you can get that taken care of. It is a very important document. It is online, it is free, and I really recommend that you take a look, that you go in, and it asks you all kinds of security questions. It is super secure. And I had to think very carefully when I got mine because it asks you questions that you think, now, will I remember when I gave them my grandmother's maiden name or something? And there's a series of them. So do take the time and make the effort to go and do this. It's very, very important to the taxes that you paid in, your FICA taxes, and that you get the full credit for what you've paid in in the benefits that you ultimately receive. And remember, you can get disability benefits if you're so severely disabled that you can't get a job in the economy. Social Security provides disability insurance. So it's not only like a life insurance policy, which is cost of living adjusted and goes as long as you do, but it's also a disability insurance policy, and it insures your family. Next slide, please. Tax credits. You may be entitled to special tax credits even if you receive Social Security or supplemental security income. Now, we've already talked about that you pay FICA tax. And do you have to pay income tax if you receive certain kinds of credits and you're already receiving Social Security? And the overarching answer is no. And I am not a tax specialist or an IRS representative, but I'm going to give you the resources to look. Next slide, please. If you are receiving child tax credits from the COVID child tax credits, the child tax credit is not considered income. And so you can claim the child tax credit for any qualifying child, and you can get up to $3,600 per child under 6 and $3,000 for each child qualifying 6 to 17. That's 2021, and that's the tax year that we're talking about. Now, at the bottom of that slide, I have references for you if you have questions. But this is worth knowing if you are receiving or if you received a child tax credit. Next slide, please. Gives you just a little bit more information here. Now, the Earned Income Tax Credit, the ITSE. If you are receiving Social Security or SSI, the EITC does not affect your eligibility for the Earned Income Tax Credit. Now, Earned Income Tax Credit provides low to moderate income workers and families a tax break. If you qualify, you can use the credit to reduce the taxes you owe, and it may increase your refund. So again, a heads up on this. To learn more about the EITC, I've put down the IRS's Earned Income Tax Credit webpage there for you to go take a look. If you are counseling people, this is a place to look. Low income people, they may qualify for the Earned Income Tax Credit. It's worth taking a look at. Next slide, please. And who qualifies, just to give you an overarching idea, if you have worked and earned income under $57,414 and have investment income below $10,000. Remember, this is tax year 2021. Okay, but take a look at these if you think you or someone you know might qualify for the Earned Income Tax Credit. Next slide. Now we're going to go to retirement. I'm receiving Social Security benefits now. What happens? And this can be you or someone you know, your mother, your spouse, all kinds of little goodies here. Next slide, please. Who receives Social Security benefits? And I noticed when I was going over the slides earlier this morning that I have written down disabled workers twice. And I guess because I think that's a really important part of Social Security. About 65 million people receive monthly Social Security benefits. The great majority of them is retired workers. But coming behind is disabled workers, widows and widowers, spouses, and children of deceased workers. And I know lots of young people whose father, my oldest best friend, Her husband died at age 50. She had 4 boys. Now, 2 of them were already older than the age, and I will show you that in a moment, that they couldn't qualify. But her 2 youngest boys did qualify as children of deceased worker, and that provided Social Security benefits for her children, who it used to be termed in her care children. That made a tremendous difference to the family because that provided support income for her 2 boys. She's a nurse, and she had moved up the ladder to the point where she was heading up the education department in the hospital. So she could work at nights, be home days, give the kids breakfast, lunch, and all of those things before she was teaching at night. Well, when Roger died, she needed to go back to work full time, but she said she hadn't given anybody a shot in more than 10 years. So she needed to go back to recertify. And what the Social Security benefits did was they supported her dependent children long enough for her to be able to go back to school and recertify and go back into the full-time paid labor force. And then those 2 children aged out as well. And widows and widowers, spouses, disabled workers. So Social Security provides more benefits to more people than just retired workers. Next slide, please. Can I work and receive Social Security benefits? Well, if you are under full retirement age, and my next slide is going to show you what full retirement age is for the entire year. Now, right now, I think, and in fact, let's drop down to the next slide and then we'll go back up. Next slide, this one. Okay, so it depends on birth years. Excuse me. And if you were born 1960 and later, the full retirement age is 67. And you can see how it jiggles up and down. So now let's go back to the last slide. So if you are under full retirement age for the entire year, $1 in benefits is deducted from your benefit payments for every $2 you earn above the annual limit. And for 2022, that is $19,560. So you can earn, and they are called the vacation workforce. There are some people who go and work for just a couple of months and earn right up to the limit and then say, that's it. If in the year you reach full retirement age, $1 in benefits is deducted for every $3 you earn above $51,960 in 2022. Only earnings before the month you reach your full retirement age are counted. Once you reach full retirement age, there is no limit on the amount of money you may earn and still receive your full Social Security benefit. So here's the thing. Social Security benefits were designed to replace income lost due to retirement, disability, or death of the worker. And as one of my more semi-humorous friends said, it's not a prize for turning 65. That was when full retirement age was 65. It really is there to replace income. However, since people have started living much longer, when Social Security began in the 1930s, most people didn't live to be 65. So now people are living into their 70s, 80s, 90s, and my mother lived to be 101. I'm from Minnesota. We say in Minnesota, we're frozen half of the year, so we're only half as old. That may be the case. My dad lived to be 94. But we want to provide people the opportunity, if they want to work longer, If they need to work longer and they can, and again, here are the full retirement ages, then let's do that. So there's some special rules for if you want, and I printed them out, and if you would like, I can send Angela, because I didn't put this down on the slides, a link about stopping and starting your Social Security benefits. So let's say, and in COVID, we've had, what do they call it? The great resignation, not the great retirement, the great resignation. And a lot of people who are older, who are eligible for Social Security, 62, said, I've had it, I'm out of here, I don't want to do this anymore. This is crazy, I can't do it all online. Or they're making me come in and I'm afraid I'm going to get COVID and die. So they stopped working and then said, oh my goodness, Social Security benefits are reduced for each month before your full retirement age. So from 62 to, let's say your full retirement age is 67, each month that benefit is reduced because you're receiving the benefit for a longer period of time. And you have the choice: receive it longer and receive a smaller monthly benefit, or receive it shorter and receive a larger Social Security benefit. Of course, if you live to be 101, you're receiving it really, really longer. But the idea is, oh my goodness, I can't make it on my Social Security benefit, but if I go to work and earn, I'm going to lose my Social Security benefit. What do I do? Well, there's something called suspension of benefits, and you can suspend your benefits. Now, if you are 62 to full retirement age and you've been receiving benefits, if you want to go back to work and make a full salary, then you are going to have to pay back the Social Security benefits that you received so far. If, on the other hand, you are at full retirement age and you said, I've had it, I want out of here, but I still can't make it on Social Security, or I still can't make it without going into the office, contributing to the brackets for the basketball tournament, seeing my friends. Can you suspend your benefits? And yes, you can. And you can hold those benefits. You can stop and say, oh, I want to stop my benefits, and not pick them up until you turn 70. And there is an advantage to that, because for the months that you do not receive a benefit between full retirement age and age 70, there is a bonus. So your retirement benefit at age 70 will be higher. Now that's full retirement age to age 70, 62 to full retirement age. You will have to pay back the benefits that you got, but you can still go back in. And that is a bit of a hassle. I give you that. But those are things that you may want to consider. And it's called suspension of Social Security benefits. So keep that in mind, and I will definitely send to Angela or Angie a reference point. Oh, also something about if you suspend benefits. You know, your Medicare starts at age 65, and by the way, it doesn't start automatically. You have to apply to get your Medicare. And you can decide on your Medicare Part A, that's your hospital insurance, and Medicare Part B is your physician and all kinds of other accoutrements, not glasses and not teeth, by the way. And Medicare Part B has a premium. and that premium is deducted from your Social Security benefit. So if you suspend your Social Security benefit, there is nothing to take that Part B premium out of, and so you have to pay that separately. Just a heads up on that. Okay, so here are the full retirement ages. I suspect that many of you were born 1960 and later, and that your full retirement age is 67. That was based, that's from the 1983 amendments to Social Security, when we were kind of in the same condition that we are now, as far as the trust funds being empty and lots of people taking benefits. And so we needed to bump up benefits and maybe tax, or bump down benefits, maybe tax a little bit more, FICA tax. And so they said, well, one of the things we can do is, we're living a lot longer. We didn't used to live this long, so let's raise the full retirement age, but we want to keep age 62 so that people who are disabled but not severely disabled enough to get disability insurance, but who want to leave the workforce, can at 62. So that's what that was all about. Next slide, please. Will my Social Security benefits be taxed? Okay. I'm retired and I'm getting a Social Security benefit. Will they be taxed? Go up to the slide just before. There we go. And the answer is, as usual, it depends. If the majority of your income is Social Security only, you probably won't have to pay taxes on your Social Security benefits. If you have other income in addition to your benefits, such as if you're working and earning wages, or if you're self-employed, if you have taxable or non-taxable interest and dividends, if you've made investments, your 401k may come back and now you're paying taxes on that, and other taxable income that must be reported on your tax return. You may have to pay taxes on your benefits. About 40% of people who get Social Security have to pay income taxes on their benefits. Now, let me assure you that it isn't, boom, here's the amount of your Social Security, and here's a knife and whack, we're going to whack this tax amount out of your Social Security. The formula works, and I'll show you that in about 2 slides. We're not quite there yet. It adds your Social Security benefits to your other income and comes up with a total. So it's everything added together. It isn't just your Social Security benefit being taxed away, as somebody said to me. Next slide, please. How much will my benefits be taxed? Okay, you will pay taxes on your Social Security benefits, and these are the IRS rules. If you file a federal tax return as an individual, and your combined income, and I'll define combined income for you a slide or 2 down, is between $25,000 and $34,000, you may have to pay income on up to 50% of your benefits. So if your benefit is what, 25 or 30,000, that's a round number, 30,000 a year, you would have to include 15,000 in your tax as you account for your income. If your combined income is more than 34,000, up to 85% of your benefits may be taxable, included in that amount. Next slide, please. I love this little thing up here with the bride and groom heading off in different directions off the top of the wedding cake. If you file a joint return, you and your spouse have a combined income that is between 32 and 44,000. You may have to pay income tax on 50% of your benefits. If your combined income, if you're filing a joint return, is more than $44,000, you may have to pay up to 85% or up to 85% of your benefit amount may be taxable. Now, if you're married and file a separate tax return, you will probably pay taxes on your benefits. Next slide. Here's the formula, just to help you understand. When we say combined income, what is combined income? It's your adjusted gross income plus non-taxable income and non-taxable interest. Non-taxable interest is generally on municipal bonds, that kind of thing. Your tax person can help you on that, or you can go to TurboTax, but it is there are certain kinds of interest that are not taxable. Then 1/2 of your Social Security benefits, and that equals your combined income. And then that combined income amount is the amount that up to 50% of your benefits will be taxed, or up to 85% of your benefits can be taxed. And this is also part of the 1983 amendments. These are IRS rules, but they suggested including your income, if your income is above a certain amount, in taxable in your taxable income. And I've included there at the bottom again an IRS publication. Okay, boy, am I just fire hosing you with stuff and making your eyes spin around in your head? Next slide, please. Okay, what is an SSA 1099 and why is it important? And the 1099 is the tax form that the Social Security Administration mails each January to people who receive benefits. And it shows the total amount of benefits you receive. This is what you get from an employer as well. You receive those 1099s, and it shows the total amount of benefits you receive from Social Security in the previous year, so it'll be in 2021, so you know how much Social Security income to report on your tax return. Again, very, very important. Next slide. And if you've lost or misplaced your 1099, back to what I was talking about before, we have that My Social Security account, and you can go there and get an instant replacement on your My Social Security account. And if you don't already have an account, you can create one online, and that was on slide 8. We don't have to go back there, but if you look at these slides, there it is. And again, I urge you to do that. And to get your replacement form, SSA 1099 or 1042S, and that's a different kind of income, select replacement documents. It's a tab to get the form. Okay, next slide. How do I pay taxes on my Social Security benefits? Okay, so I make enough money and I need to take money out if I decide I want to have federal taxes withheld from my benefits. How do I do that? You can ask SSA to withhold federal taxes from your benefit payment when you first apply. If you're already receiving benefits, or if you want to change or stop your withholding, you can get a form W4V from the Internal Revenue Service. And the form will ask you to select the percentage of your monthly benefit amount you may want withheld. And you can have 7, 10, 12, or 22% of your monthly benefit withheld for taxes. And I do not know why those percentage amounts were chosen. I'm sure there was some reason. I do not know what it is. But if you have a higher income and you feel it makes sense to have money withheld from your Social Security benefit, this is the way to do it. And again, Tax Guide for Seniors from the IRS, there's the publication to get further information. Next slide. Well, I have to pay state income tax on my Social Security benefits. So we've already talked about paying federal tax. 12 states collect taxes on some or all of your Social Security. And there they are. And you'll notice that the District of Columbia, Maryland, and Virginia are not among them. Minnesota and Utah, interestingly enough, use identical rules to the federal government, that 50% and 85%. Other states have different ways of taxing. North Dakota just recently amended its tax code to strike Social Security benefits from taxable income. So they say you've already been taxed, you shouldn't have to be taxed now. States' rights. Next slide, please. And here we are. It's a tax season already, and it sure is. And this year, they're not putting, see, when did we go last year? Was it April 1st? And then didn't they move it back, as I recall? Two years of COVID have just completely fried my brain. This year, the deadline to file and pay your 2021 federal taxes is April 18th. And if you have a question about that, there's a hot link there in the slide. You can copy it and go there for information about free filing. You can always try and call the IRS, but things are pretty much a mess right now still at the IRS. They're trying, but they're way down on staff. So if you can do it online, that's a great thing. As far as state taxes are due in DC April 18th. Maryland is July 15th, and Virginia is May 1. Who knows why? And if you owe taxes, there are a few payment options available. You can pay online with IRS Direct Pay. If you cannot pay in full, you may qualify for an online payment agreement. Visit the IRS payment page to explore all of your payment options. Worth doing rather than saying, I don't have it, I can't pay it. Check it out. Now, from here on, I have a few extra things to say. Now, my next slide, please, is a thank you. But I have a few more things I'd like to throw in, and I see it's 1:47. Can I sneak a couple more slides in, Angela? Yes. Let's go to the next slide. Let's go to the next slide, please. Okay, next slide, and I'll go quickly. There are scammers out there scamming on everything. But the biggie is the Social Security phone scams. Be aware, be informed. Social Security will never call you up and say, give me your Social Security number, I need to correct a mistake. They will mail you a letter. They will not ask for your Social Security name. If somebody says there's a problem with your Social Security number, hang up. Don't provide the caller with money, cash, gifts, or anything, and report it to the Social Security fraud hotline. Enough said. Next slide, please. This is a biggie, and I think it is an umbrella overarching all the things we've talked about as far as taxes and income. To get a Social Security benefit, you must have at least 40 quarters. That means basically 10 years of contributions. You can earn up to 4 credits per year. That's contributing. In 2022, a credit equals $1,510 in earnings. So $6,040 total. And you can contribute your Social Security portion of that $6,000 plus all in one go or in 4 different quarters, but it qualifies you for, now I say a very low benefit, but it will qualify you for a benefit. Benefits are calculated based on the wage indexed average of your lifetime earnings. What in heaven's name does that mean? That means they take your highest 35 earning years. And remember, we talked about this is not like the high five of a pension, but it's your highest 35 earning years. And that's why it's so important that you be sure that those earning years are there in your earnings record, and they are indexed to the value of wages today. So that means, again, to oversimplify, but it still works. When I was teaching high school back in 1969, my salary was $6,000. What does a first-year teacher earn now? I think, what, 36,000, something like that? Is that about right? So my wages from 1969 would be indexed up to their value today. So all of my highest 35 earning years would be indexed up to their value today, and then they would be averaged, and then a formula is applied. So understand again how important it is that if you don't have 35 earning years, a 0 will be put into the average. So say you have 30 years of earnings, there will be 5 years of zeros put into that average. So if you are retired and you say, gee, I think I'm going to go back and get a job. And wait a minute, I have to pay FICA. Yeah, and that's not a bad thing, because that may give you one more year of earnings and eliminate a 0 year and increase your Social Security benefit. Every year that you work and earn and contribute, they will do a recalculation of your benefit to see if that increases your benefit. So it's really a good thing. Social Security does tilt the benefit calculation, tilts to replace a higher amount of what lower income people contributed than what higher earners contributed. Higher earners still get a higher dollar amount, but lower income earners get a higher replacement rate. And if you would like a fact sheet about that, I will go and get a link. The National Academy of Social Insurance has done a very nice discussion of the benefit formula. Now, again, the easiest way to get an estimate of your benefit is to sign up for a My Account, and you can see what there, and if you've only got 15 years in the labor force right now, it's going to be a long-term guess. But if you've got 25 years in, we can give you probably a pretty decent guess at what your benefit is going to look like, and that's worth knowing. Next slide, please. And again, just a reminder of, we talked about this way up at the front, who pays and how much. We all pay 6.2% for old age survivors and disability insurance, that's Social Security, and 1.45% for Medicare. And for the privilege of paying those taxes, we receive life insurance that covers our families, our children, sometimes our elderly parents if they're dependent on us. It covers us if we have a severe disability and our family is dependent on us. And it covers our children and our spouse should we die, and they still need a base benefit. Social Security is a base, and I emphasize that. This is not something you should say, I get Social Security, so I don't need to save. You do. It's a good thing to save, but count on Social Security. It is cost of living adjusted based on the Consumer Price Index every year, and it will be there for you. Whew. Okay, I ran a little over, but I really wanted to tell you those things and emphasize those things. And I saw some things going by on the bottom of the screen, but due to my glasses, and I apologize, I must look ridiculous with this on the end of my nose, for not being able to read everything. Angie, you were going to be the question person?
Yes, I'm going to be the question person, and I'd like to thank you before I started reading off those questions. What a thoughtful and thought-provoking presentation. And so thank you. Laura, it looks like we have about 6 minutes, so I'm going to read as many questions as I can. Someone did have a question about earning above $147,000. I think you covered that, but just wanted to let you know that there was a question about that. And
yeah, that's not tax. You don't have to pay Social Security tax on anything over 147,000. Yeah, this year it's 140. In 2022, it's 147,000.
okay.
You stop paying FICA tax.
Okay, thank you. And then there's another question, and it reads, once I reach full retirement age of 70 and continue to work and make less than $51,000 a year, what will I be expected to pay?
I'm not quite sure. On income tax, I'm not. You don't at 70,000. I mean, at age 70, you can work and earn all you want without a penalty, without that $1 for every 2 or $1 for every 3. You can earn 100,000 or 200,000, and you will not be penalized for working and earning. However, you will still have to pay FICA tax. And if you earn, well, you said you earn under 50,000, you'll still have to pay FICA tax on that. That may or may not affect your benefit level. Is that clear? I understand the word tax floats around here and what is and isn't tax. Yeah. Did that answer your question?
It answered it for me. I hope it answered it for the person who asked. And if not, please let us know. We'll be happy to discuss that with you.
Yes.
And then I have a question, and I wanted to know when you reach that age of majority, if you will, does Social Security contact you to say, now it's time to start taking your benefits? Do you get anything in the mail, any type of notice?
No, you don't. And particularly, I emphasize for those of you, some of you are staying in the labor force and are carrying health insurance with your job. You don't have to apply for Medicare at 65 because you've already got health insurance. But if you do not, and you wait later than 65 to apply for Medicare, there will be a penalty. So, and nobody's going to notify you of that.
Ah, okay. So
yeah, there is a penalty. Well, that means, see, the reason, I'm sorry, for Part B, remember you pay premiums for Part B, for the doctor's part of Medicare. And if you say, well, I'm going to wait, I'm not going to get it at 65, I'm going to wait until I have a diagnosis of cancer, and then I'm going to buy in. Well, that's not what insurance is. Insurance is a big pool where we all pay in, and where someone gets cancer, then we help pay for that, for the doctors for that. If you wait and don't pay in while you're well, then there's a penalty for that because you haven't been contributing to the group. That's the thinking behind that. That's the thinking behind all insurance. I paid in all kinds of insurance for my car, and I didn't have an accident last year. But if I had, it would have paid for me. And as a result, probably some of what I paid for somebody else's accident. But that's the thinking. We all pay in. If you don't pay in, then there is a penalty.
Okay, Laura, it looks like we have 2 minutes, and I'm going to sneak in 2 questions. And so
Okay.
my first question is, what happens to Social Security benefits if that person dies and doesn't have any beneficiaries? Where does that money go?
Okay, so, well, how about it depends. If your spouse dies and you are still alive, you are eligible for spousal benefits. If the spousal benefit is higher than the benefit that you have earned on your own. If your spouse dies and you have children under the eligibility age or that are eligible, then the money goes to support them. So it is there. If I die, my Social Security benefits die with me because I paid myself. It is again, paying into the pool. We all pay into the pool, and when I die alone, my benefits they go back into, if you will, the trust funds or back into paying benefits.
Oh, okay. All right. Well, thank
But
you.
remember, they're there for the dependents of a deceased worker. So you've got lots of people who get those benefits after the worker has died. It's just not when I die, I leave my benefits. It's not like an insurance policy.
Okay.
Where I leave this to my heirs.
Okay.
This is social insurance.
Thank you for that. And then my last question is, I know this happened with the Bush administration, not to speak to politics, but I'm curious, is there any talk or any chance that Social Security will become privatized?
It is a discussion that it goes like this. When things are really, really good, then people say, oh, look at the stock market and Social Security. We're not sure what's going to happen. So let's invest part of the trust funds in stocks and bonds. And then when something like 2008 happens, where the market tanked and Social Security is going along, everybody says, whew, thank goodness Social Security is there. I could not say for sure that it will never, ever get as close as it did last time. But I don't think so, because I think people see we have opportunities in the private sector. We have 401ks, and if your employer doesn't offer a 401k, you have an IRA. You can do an IRA on your own, or a SEP IRA, or a simple. There are all kinds of ways to save outside of Social Security. So if you think about it, and I think if most people think about it, they say, ooh, let's leave Social Security as it is, invested in the safest documents possible, which is federal securities that are designated specifically for Social Security.
Wow. Laura, we are at 2:02, and I promised I'd give you your day back. You've been so generous with your time, and I certainly have learned a lot, and I hope our audience has learned a lot. We've got several requests for your presentation, and with your permission, would love to share that presentation with those.
Yes. As long as it's not used, I mean, use it personally, as long as it's not used again for another group without Weiser's permission.
Okay, absolutely. Okay. Well, Laura, I promised you I'd give you your day back. It's 2:03, so I want to thank you.
Thank you.
Thank you so much for joining us, and many thank yous to our audience for joining us. We hope you can join us again as we unpack Social Security and income security and retirement security.
Yeah, thank you. And sorry about the fire hosing of information, but there are places on all of the slides that you can go look and get more. Okay. I appreciate your giving me your time.
Thank you, and the same. Have a good weekend, everyone.
Bye-bye.
Bye-bye.
Bye-bye.